Rightmove just released their latest house price index, and on the surface things look stable, but there is a massive red flag brewing that most people are ignoring.
Oil prices have gone up again, and that's because people are worried about what's happening in the Middle East.
The price of gas in Europe is more than double the level seen before the conflict began.
Today, I'll be breaking down what's currently happening in the UK housing market. Are house prices going up? Is it still worth being a property investor? Should you be building your portfolio up, or should you be tearing it down? How a crisis thousands of miles away is about to hit your mortgage rate, and why the latest Rightmove data shows a market that's about to split in two. If you're planning to buy or invest in 2026, you need to see this, because the data is calm, but that's what kind of worries me. Quick one before we get into it. I'm Remy, I'm 30, I've got 2 buy-to-let properties, currently purchasing my 3rd one with the plans for a 4th this year. I document the wins, the mistakes, the numbers a lot of people don't tell you. Let's get started. So, you've probably heard of the butterfly effect. So the idea that a butterfly flapping its wings in one part of the world could cause a tsunami in another. A small event somewhere causing something much greater. How in 1914 there was an assassination attempt on this chap. It failed. His driver took a wrong turn which led them outside of a shop where one of the conspirators who failed was ordering a sandwich. By pure coincidence, shot him. And that triggered World War I. In 2026, that wing flap is an oil crisis. It's not just about the fuel in your car, it's the delivery lorries, the cargo planes, the global transport costs. And when those go up, the price of everything else goes up. Inflation rises, and that's exactly where the Bank of England base rate meets your front door, your mortgage rates and your property values. So what's actually happening with property prices right now? So asking prices are up £3,023 on average, which is normal for this time of year. The number of homes for sale is at the highest level that it's been for 11 years, with the actual daily activity in the market being only 2% less than last year. And the thing to remember is we had the stamp duty deadline last year, and it's 5% ahead of 2024. So activity seems quite strong as well. We have higher values, more properties for sale. Maybe we're not completely screwed, but it is tough. It's the longest that properties have taken to sell at this time of year since 2013. That shows that something has changed. A higher average selling price, it doesn't mean a whole lot when more properties are sitting on the market for longer than ever. The conflict is all very recent, so the question is, are we about to face some big drops? Stick around and I'll give you some tips on mortgage rates, property values in your area, so you can figure out how much this will actually impact you. This graph shows the average monthly payment for a first-time buyer with a 10% deposit. So everything from the wonderfully low rates in 2021 right up to a few months ago when inflation was getting under control and rates were falling in line. And then look at this little jump here. By comparison, I took the rates offered for a 90% loan to value from a high street lender that's very well known for its first-time buyers. From 4.24% in February, climbing to 5.15% at the latest release. If you were looking to buy at £250,000, this would take your mortgage payment from about £1,087 to about £1,229, a 13% increase in just over 4 weeks. To put it into context of us rather than first-time buyers, 2-year fixed rates are probably about 5.87% on average, a 5-year at 5.76%. That's the environment that we're operating in right now. But of course, these do change daily, so could have changed. Rents, same story, steadily going up over time. You got the Renters Reform Act coming into force with more legislation, higher costs for landlords more than ever. And do we think rents are going to come down as a result? I very much doubt it. It just means everyone is going to feel the effects of this more than ever, because in reality, we have 2 main options, either rent or buy, both of which aren't looking great right now. The upside, with talks of a ceasefire putting a little bit less pressure on inflation, some lenders such as Halifax, HSBC, Santander, they're actually lowering rates slightly. So if you're starting a new mortgage or coming to the end of your deal, it's a good idea to work closely with your broker or your lender, because rate cuts are starting to build a little bit of momentum. So who in the UK is still winning? Month to month, all areas have seen some house price growth, with one exception being London. Scotland's probably seen the greatest increase, but as investors, let's look on the year-on-year picture. It tells a much clearer story. So starting at the bottom of Great Britain, so you've got the southwest, southeast down about 1.72% year-on-year. Got London here as well, down 2.7%, all about 75 days on average to find a buyer. Again, moving over here, down about 1% east of England, East Midlands. West Midlands gone up about 1.2% year on year, and Wales 1.9% gone up as well. But then what I've noticed is the further up north you move, like you start to see those year on year figures go up, and you also see the average days to find a buyer coming down, which is quite an interesting trend to see, especially, in Scotland, up 3.8% year on year, with 33 days being the average time to find a buyer. The southern parts of the country are going to be hit harder by inflation, the cost of living going up. Over time, all this is going to do is push people more up north, especially if you can get a 4-bed detached house up north for a lot cheaper than you can somewhere else. More jobs than ever are remote. You can do them anywhere. That's going to push demand up even more. In reality, if houses are easier to sell, selling quicker, that's going to push house prices up further. And that could explain why we're seeing the data for Scotland, the northwest, the northeast, Yorkshire, all going up in that kind of trend. And with things how they are, maybe this trend's going to carry on. What are the lessons to take away? If you're looking to buy, stress test well. Make sure that property still profits, even if rates increase further. We don't know where this conflict's going to go, but it's tough being a landlord anyway, especially if your rent is going to simply match your costs. If you're selling, price your property right and do your due diligence. So too high or too low, and you're going to struggle. If you're coming to the end of a deal, keep an eye on rates, work with your broker, lender to explore your options. They may continue to come down, but if anything threatens the ceasefire, we could be in for a whole more world of pain. The reality of the world right now is none of us really know what we're doing. You may have seen things similar in the past, but you haven't experienced exactly this before. The specific impact it's going to have just makes it more important to stay on top of what's going on and your responsibilities as property owners and as landlords, and that's what this channel is here for. If this was useful, please hit the like button. It genuinely helps the channel out, means the absolute world to me. Hit subscribe if you want to follow along with the journey. Keep on top of property values, rents, interest rates, your responsibilities as a landlord with all the tax changes, the Renters' Rights Act coming. You don't want to miss out. Leave your thoughts down in the comments. I read every single one, but thank you so much for watching, and I'll see you in the next one. Bye bye.